Unless you've been living under a rock, last week we saw some turmoil across the markets. The S&P had corrected and shifted to the downside just below 10% in value, causing a global shift and panic across the board. In this video, we're going to be talking about the current state and the situation of the stock market, and we're also going to be talking about how this has affected both of my portfolios, one on Trading 212 and the other one on free trade. Now, what actually happened? Why did the stock market start falling? Now, without going into the nitty-gritty and the details, essentially a carry trade occurred where investors were purchasing money in one currency, in this instance is the Japanese yen, and they were buying US assets to yield a higher return. This then allowed investors to profit off the difference, also known as the spread. Now, essentially, the yen has been depreciating for a while now. Since 2008, interest rates have near enough been around zero. And when the central bank of Japan increased their rates, this then caused traders to close their positions and manage risk because of the interest rate hike. This then, coupled with the Magnificent Seven stocks being heavily overvalued, added and supplemented to the flames and the crash of the current market. Now, investors are even predicting over $800 million worth of value will be shed from these stocks. Now, this shows us one thing currently right now within markets, and that shows us that markets are uncertain. If we just have a look at the VIX index, we can see how volatile the market is, which is also a representation of fear and greed. Currently, as the VIX has spiked so high, this is an indication of current fear within the market. As investors are panic selling, people are less likely to get into positions and they'd rather dump their positions because of the turbulence that we've currently seen within the market. As mentioned at the start of this video, I have two different portfolios. One of those is on free trade and one of those is on Trading 212. Now, for my long-term investments, I stick to Trading 212 because of the user interface and the cost effectiveness of the platform. Free trade I use more of a short-term play, however, it is still a decent option to have a look at as well. Let's have a look at the current position of my Trading 212 portfolio and talk about some of the positions that I'm in and the reason that I entered these positions. Quite interesting to have a look because honestly I don't look at the portfolio much, as it is much more longer term. Everything's pretty routine and automated. So kicking it off, let's just have a look at a high level overview of my baby portfolio. We're gonna document it, we're gonna see where we can take this portfolio over the years. However, I did start this portfolio back in December, I believe, and at the moment we're currently invested into 4 different asset classes, heavily weighted within the S&P 500, as over a long period of time that has shown that it will yield higher returns than just picking average stocks. Secondly, I'm building out a position within Alibaba. Now, Alibaba, I can go in a lot more detail on another video. However, the stock at the moment is currently undervalued, and a heavy reason why the share price is at an attractive price point is because of political risk and tensions with the US and China. So this has caused massive decline within the stock. However, it is going to compete with the likes of Amazon, and at the price, and again you get paid a dividend from this stock as well, it is a good deal for me and something that I'm going to be building out and holding for the long term. I also have a very small position in emerging markets, so some more exposure within Asia there, and this is a position that I haven't really touched in a while. However, it's something that I do keep an eye on and do hold within the portfolio, although it's a small allocation. And I also purchased some more Google stock, so I already have exposure with Microsoft and Google on my free trade portfolio. However, Google did show some opportunity or value, so I bought a small position in Google, which is doing all right in the moment, which we'll share on this breakdown. Now let's just have a look at the left hand side of the portfolio, and we can see where I've obviously started building out my positions and essentially dollar cost averaging my way into the market. So I started off with £500 and been consistently depositing each month, and we can see how the yearly return so far, my decision so far with the portfolio growth. So yeah, we're ticking up very slowly with this uptrend, and again, this won't last forever, I'm completely aware of that. However, spreading out my risk, dollar cost averaging and buying into the market, and as well as good companies, will eventually show off dividends in the years to come. Now, it goes without saying why the S&P is my largest holding within my portfolio. It's shown a proven track record of generating good returns, investing over that long period of time, and although there's been some current turbulence within the market, it's still up just over 14% as of recording this video, so it's very robust. Now, looking at the reason why I invest in the Vanguard S&P DIST, it just basically means that the dividend is distributed into my account rather than automatically reinvested into the market. It doesn't really make a difference, it's just something that I've chosen to stick with. Now, my second largest holding is currently Alibaba. It's a position that I'm building out, and even just touching briefly on the reasons why I invested, as I said, it's at a very valuable and attractive level. Now, if we're just having a look at just the PE ratio, it's even below 10. So that does show me something in terms of the price relative to the amount of earnings that this company is generating, and also pays out a generous dividend yield of pretty much 2.5%. It's definitely a company that is embracing the new technology that is emerging as well. And if you're looking at the distribution and how this company is almost acting like an alternative for Amazon for different products, and how they're penetrating different markets such as in North America as well as the European markets as well, definitely one to watch out that will compete with Amazon. It's just that political risk there that you have to take into consideration. Now, given that the Mag 7 constitutes to around 28% currently of the overall index, it's going to be interesting to see the different changes that will occur within the markets. We've already seen a slight correction so far, and again, there could be further downtrends, which is obviously a good thing because it's an opportunity to purchase and again hold out for the long term. So it will be interesting to see how these things will play out, where these large institutions will be reallocating their portfolios and where that capital will be going. Overall, my strategy won't change as such. I will be dollar cost averaging into the markets to really just spread out my risk and bring that average price down that I will pay for each stock or ETF. Now, I'm interested to hear your thoughts of the portfolio. Where do you think the markets may go next? Do you think there will be another downturn? And again, if there is anything that you want me to share in a lot more detail, drop those in the comment sections below, and I'll see you on the next one.